John Velissarios from OtrantoEQ. Is it OtrantoEQ? Yes. And you have a background on computer science also, yes, and cryptography, like so many, like they also Mark and who left just the stage. And you will talk about, of course, central banks and how central bank digital currencies and how commercial banks could deal with it. Sure. And the floor is yours. Thank you.
So yeah, it comes from a number of years of experience in working together with central banks. I've been working in this area for since actually 2013, believe it or not, working on various central bank digital currency projects. And in that time, done quite a lot of stuff in terms of projects from sort of strategic initiatives all the way through to implementations and rollouts of CBDC projects. So what I want to do today basically is cover one aspect of where we see things developing in terms of CBDC projects, and that's specifically in the area of where commercial banks can now start to deploy these kind of solutions. And before I get to that point, I want to take us through a couple of slides to just walk us through that journey. I won't belabor the point. Everybody sort of knows this quite well, I think, in this room and in this conference. But one of the things that we want to make sure that we sort of cover is that at the end of the day, it's not just about CBDC. There's a lot of different types of digital money out there, from crypto to deposit tokens and stablecoins and so on. And CBDC is obviously the theme of this conference. But we need to make sure that we understand the whole wider spectrum. And I think there's a lot of things that are going on in this area. We're going to focus on the last one, but I just want to put that into context of the other things that are happening. The other aspect of it as well, there's a lot of things regarding sort of CBDCs. And I think one of the key messages that I want to deliver about this, and this slide sort of covers it, hopefully the last column that you see there, is that it has the potential of rewiring global finance. We're sort of seeing that, and I'll cover that in a couple of slides in a second. But we see sort of the opportunity here because what we're sort of seeing, sort of the deployments and rollouts and so on, is how you now can sort of implement a number of things from a cross-border perspective, and rewire sort of global finance as it sort of exists today. The other thing I think as well, which is very important, and I think we've covered it in this morning session, I heard a little bit about this obviously from the digital euro topic, is that CBDCs sort of provide a sort of a sovereign payment rail. They are giving you the opportunity to actually, in a domestic context or in a regional context, provide you with a degree of sovereignty and control over the payment systems that exist. And I think this is also a very key and sort of a point that I want to cover. A lot of initiatives around the world. This is just a slide from the CBDC tracker. Great sort of tracker that talks to the sort of the various projects that are out there, of the number of initiatives that are there. I think the interesting thing here is the number of also different type of technologies and implementations and different solutions. And every project is different. In my experience, I've worked on 18 different central banking projects. Every single one has been completely different, from the technology, the context, the considerations. Every aspect of it has been very, very different. So there's not a single pattern to just repeat over and over, I think, which is interesting in itself. A lot of global imperatives, like why is this sort of an important point? And I'm going to spend just a little bit of time on this because I think what we sort of think about it, we look at CBDCs from a technology perspective, but I think one of the, and also from a payments perspective, but I've, in all of the projects that I've worked on before, not a single one has ever been about coming up with a business case for it, actually, which is very remarkable. It's always been about strategic sort of imperatives that are driving the implementation of these projects. There's a changing landscape. The topic of sovereign independence, even this morning session is a discussion point. I think it's an important point to sort of mention. And projects that we've seen, that I've been involved in have always covered this topic at the core of the basic requirements for sort of CBDC sort of projects and rollouts. It's also connecting new financial systems together. So things like bilateral settlement, multilateral settlement, trade corridors as well, looking at how to actually roll these things out, and focusing on sort of the trade corridors that allow sort of this new type of innovation to enable this kind of sort of progress and so on. And I think that's also an important point. What you see here is sort of the layout of the new sort of financial systems that we're covering, especially around sort of new, reserve currencies and correspondent banks and things like that. I won't spend a lot of time on this. It's on the slide, so you can. I'm sure you'll be able to get it through the distribution of the material. But this is sort of a layout of the different types of digital money, and it's important just to put it into context as well. So there's a few more sort of data points that are here that I think are interesting in their own right. When we started working on projects from the very early days, we've always looked at CBDC with regards to sort of the architecture and the solutions behind them. How do you roll it out? How do you implement this? What are some of the considerations that you have? And I think one key important point is that we've always looked at this as a two-tier architecture, where the distribution and the rollout of CBDCs are intermediated through financial intermediaries and financial institutions. And that's been sort of at the core of all of the different projects, at least that I've been involved in, behind sort of the CBDC engagements. And at the end, you also have, at the bottom of this, you also see sort of at the slide, you'll see sort of the digital wallet providers, whether they're custodial or non-custodial or self-custody sort of wallet providers that are there. But at all times, we've all been looking at sort of how do you distribute CBDCs into the marketplace? Who are the financial intermediaries, the wholesale, the sort of the bit in the middle, how you do sort of the transfers between financial intermediaries, and then how do you roll that down into the wider market through sort of consumers that have digital wallets and so on. A couple of projects from a cross-border perspective. I mean, I only picked a couple because there's many going on, but I think these ones were a very interesting one, especially the Mbridge project, because it brought a lot of the different parties together from different countries and eventually rolling it out into a sort of a production a project as well. And it's gone back to sort of been graduated out of the BIS, and then it's gone back into the central bank that initiated this in the beginning. Other retail initiatives, and again, we see a lot of things, in terms of retail projects. I guess one of the bigger ones at the beginning was the e-krona project in Sweden. Upper right-hand corner, you see sort of the digital tenge project, which I will talk about this afternoon as well, in Kazakhstan. And obviously sort of the ECNY and then the digital euro project. So there's a lot of different things going on with regards to this area. And it's becoming more real. I think what we're seeing now is that these are beginning to roll out. They're sort of being implemented, and they're scaling as well. So which is very interesting. Apart from the upper left-hand one, which has been put on hold, I believe. So all of this just to get us to the point of the commercial banks, because I think this is the area I want to spend a little bit more time on. And I think here, what I want to cover is a couple of points. The first one is, and this comes through a series of discussions that I've had with CEOs and executives from commercial banks of why implement this in the first place. And I remember sort of the initial conversations on the e-krona project, where it was almost met with hostility as to why you would want to implement a CBDC in the country. And I found it very very challenging to try to understand why there was so much resistance at the beginning. But then after thinking about this a lot more, and then spending time with the banks, trying to understand how this could potentially disrupt their business models, and also what are the challenges that they're facing on a day-to-day basis, I think it's important to cover some of these points. The first thing, just to put it into, again, more context in terms of the partnership model between sort of the central banks, commercial banks, and the marketplace as a whole, you sort of see that from a central bank point of view, at the end, it's sort of central bank issues and redeems the CBDCs into the wider economy, as I mentioned before in the intermediated slide. It operates the core ledger. It puts the sort of the framework in place that defines the rules, the the policies and all of the requirements that are necessary to implement this in the marketplace. The commercial banks, their role, I think, from a CBDC perspective, is to distribute this, to act as the intermediary of putting these tokens and these CBDC out into the wider market, performs all of the KYC, AML checks, and actually, in reality, they own the relationship with the consumers because they actually have all those different relationships, those banking relationships and so on. And then they can also provide a number of innovation services around that. And I'll cover some of that in the upcoming slides. But I think the idea here is that there's a series of opportunities for the commercial banks to be able to explore, exploit, develop, and then further enhance sort of the offerings that are out there. And this model works. Because it sort of mirrors the cash distribution cycle. At the end of the day, when we talk about CBDC, it's sort of a different format of central bank money, like cash is, but it sort of mirrors that model in a very similar way, and it minimizes sort of the disruption, to deposits and credit creation institutions and stuff like that, and it leverages the bank's existing sort of compliance, trust and scale that's out there. So I think those three things are quite important to cover from just the partnership model that we have. But what we hear from commercial bank CEOs, how do I protect my deposit base? Who will pay for this at the end? All this infrastructure, how much will this cost my bank? And additional regulatory and compliance burden, which I think all these things are very, very important points. I'll try to cover some of those in the upcoming slide. Some strategic questions, however, so that's more the negative side, but more the positive side, like what are the new services that I can provide in this new model? And I think this is worth spending time on that, because at the end, it comes down to what are the capabilities of the solutions that are being rolled out, and how can they enhance different type of commercial models, different type of financial models, different type of relationships between all the different participants in the marketplace. And how does this affect the bank's medium and long-term strategy? Many of them are, in the middle of many programs of work, a lot of compliance work, a lot of technology enhancements, programs and things like that. And, how does this affect those kind of projects as they are being rolled out and so on? The role of stablecoins as well. So, the reason why I put the slide up at the beginning about stablecoins as well is because, many banks are considering that. We hear a lot about this as well in the marketplace. So what's the difference between that and a CBDC? What should I be focusing in on? Should I be doing both and one, or pick one or the other? And, so there's a lot of confusion around this as well. And from an observation perspective is, when I'm having these discussions with, I guess, executives in financial institutions, just a general lack of awareness of these topics. I think so. There's a lot of education that's needed. We need to find ways to actually educate the executives that are going to be making these decisions, and also preparing them for the innovation that's coming as well. So I don't want to underestimate that, because it takes quite a lot of time to actually do that, and they need time to absorb it as well. So they need to understand this. They need to sit in sessions like this. They need to hear, the stories as well, and understand it as well. So from a commercial bank point of view, what's the value for commercial banks? Why should they invest in this? Because at the end, there's a couple of different things. One is strategic value, right? So what is, and I'll go through this in a bit more detail, business and revenue, right? At the end, how can they make more money out of it for their shareholders and their business? And then also the public-private use cases that it can enable. So in enhancing sort of the marketplace, both from a public and private sector perspective, and then preparing for a lot of other things that this could also enhance and create opportunities around. So I'll go on the first. I'll talk a little bit about the first one. From a strategic value perspective, we look at sort of the protection of protect the relevance, in terms of sort of of money at the end of the day, and how programmability and tokenization can sort of support that. Maintaining customer interface in a world of wallets, right, and platforms, I think is also a very important point, because we're sort of seeing a lot of these things that different providers that are out there, fintechs and so on, neobanks that are providing new services, but how do traditional banks sort of cope with that? And then also shaping sort of the future payment standards instead of just, reacting to them. So embracing the change that's coming, and then also using that as a way to create strategic value for the financial organization. Business and revenue opportunities, value-added payment services, instant settlement, conditional payments, refunds and stuff like that. I think those are very interesting points as well, because if you start looking at the capabilities of these new sort of CBDC sort of and programmability dimensions of it as well, what can that enable? What in terms of new type of financial models, new type of payment methods, notarization services or escrow services and things like that could be provided to customers of the bank as well. So new liquidity and treasury tools, right? Enabling sort of deposits and things like that, and intraday sort of liquidity optimization and things and points that could be very beneficial for customers. And then government, public-private government payments, tax collection, and so on, emergency disbursement, programmable compliance, and things like that. And then finally, on sort of a cross-border readiness, we see some regional banks as well, the commercial banks that are looking at how can they use this type of digital money in order to create a more efficient regional sort of cross-border payment flows as well. So that's an area that is quite interesting. Is it a must? And I would say yes, simply because it reduces the dependency risk from from other non-bank stablecoins and big tech wallets. Those are happening, so they could potentially eat their lunch. So the commercial banks really need to pay attention to this. And it preserves the trust and the compliance and the regulated money at the core of retail payments. So CBDC is not a product, right? At the end of the day, it's a platform for future banking services. So this is something that I think is important to emphasize. And now the last point, the last key point I want to make is how do you engage? Like, what do you need to do? And this comes out of a couple of project plans that we put together. So I tried to summarize it here in a couple of in a couple of boxes and so on. But what do you do? And this is not an exhaustive list. There's many more things, but understanding, first of all, as a commercial bank, what is the impact assessment? What is the how do you highlight the priority areas of focus for the bank? Identify existing services that may be affected. So this digital euro is coming out at the end, and other CBDCs are coming out. How does that affect my banking services to my clients? I don't understand. Like, will it sort of cannibalize my sort of deposit base? Would it affect my payment services? That impact assessment needs to be done. I think you need to look at it from if you're a commercial bank executive, you need to look at the wider landscape of services you're providing, and every single one will be different because many commercial banks will be more retail focused or more commercial bank focused. So that there isn't a single answer for anyone in particular, but you need to look at that from an impact perspective. How does it affect your banking business? What are the value added services that you can provide on top of that? And I think here is, how do you explore new service offerings that the bank can provide, leveraging CBDC infrastructure, and then to differentiate and grow that area of business. And those value-added services could range from a number of different things. If you take a look at sort of the Apple ecosystem, the iOS ecosystem, they basically you have a number of applications that are developed, and then eventually Apple rolls out something else on top of that just displaces one of those vendors. Similar thing. At the end of the day, if you go up and down the stack of services, now you have a new format of money that can do different things than it was doing before. So can you provide additional services, value-added services as a commercial bank to the customers, to the commercial customers, to end customers, and so on, to enable them to do more things, and hence provide more services to them, and then you can charge them for that as well. And then that provides the ability to expand sort of the offerings that you have. Regional and cross-border opportunities. I think I don't want to underemphasize this. I think when we look at CBDC, this is a big area of at the end of the day, there's a lot of friction in cross-border. So how can you create new sort of services and offerings to take that friction out? Can you optimize certain things? Can you reduce your cost base as a result of that? Can you offer new services that compete with other providers in the market simply by enabling wallets and people to use the digital currency in a more effective way? The fourth point is sort of the readiness assessment. You really need to understand, from customer, staff, internal, external, how ready is the business? Business processes, technology that are able to provide sort of this in the coming years, I guess. And have a readiness assessment. Are there deficiencies in internal processes or technology capabilities, even in staffing as well? So understanding how ready you are in order to be able to do this, and then developing sort of a timeline and roadmap. So as we know, sort of, about deployments that are coming out, can we align sort of timeframes that are associated with that, and how ready are we in order to be able to sort of address those as they come in? And then also looking at cost analysis. So then this is very difficult to do because you don't know what you don't know. And I think especially when it comes to CBDC implementations, they don't, there's a lot of things that we don't know about them, timing and decisions and legislation and things like that. But having a sense of how much of an impact will this have in specific areas of my business, and then what do I need to do from launching any type of those identified services? What would it cost in order to do that, and having some sort of an idea, and then aligning that with the program office initiatives that you have. And the reason for this is you'll have typically you'll have a 3-5 year timeline for projects and programs of work. Many of those will be technology enhancements, replacements. The program office will manage a number of things, a lot of things around compliance as well. So how can you actually plug this into those specific initiatives directly, and then piggyback on top of that? Because I think it isn't only an initiative on its own. It'll impact all those projects in the program office, probably. So how can you make sure that you're ready and you're not investing in a 5-year program of work, innovation program of work, that after 5 years this rolls out and replaces everything. So you need to really understand the investment that you're going to be making over 3 to 5 year period, and how will this impact that investment, and can it piggyback on top of that investment to begin with? And I think that aspect of it needs to be looked at in detail in order to understand what is the potential implications of this project or program of work. And then finally, as I mentioned before, executive and board awareness. At the end of the day, this is a complex topic. It's a fast-moving space. It's very complicated. There's a lot of things to learn about this. And we take it for granted. We're sitting in a room and we're probably all very familiar with this topic, but there are many who don't have any idea about it. And I'm very surprised. I speak to banking executives all the time, and I ask them one question. I go, they ask me, what do you do? And I tell them it's a long life story, but I go, I'll ask, can I ask you one question? Right? And the question is, I'm a bank customer, I'm your customer, and tomorrow morning I walk in with my digital euro, what will you do? What will you do? Are you even aware of what's happening? And many of them have no clue what's going on. And I think when I hear that, I'm very frightened, actually. So I think that education and awareness is absolutely key. So we need to find ways to actually make people more aware of what's going on. And I think that's into the wider marketplace as a whole. And I think that also touches bank executives and board members and CEOs and things like that. Yes. That's the end.
That's exactly the point. Yes. Questions?
Yes.
Guys, do you have questions?
I left time for questions.
Yes, thank you.
Yeah. Sure.
All right, can you hear me? I liked your last question about what do I do if I walk in to a bank with digital euro. Here's another point. Would it be, how would I say, should it be happening in the background? So if I'm using my bank card versus digital euro, for me, it shouldn't matter. only for the bank it should matter. Like, what is your opinion about this from the customer's perspective? Should it be kind of the same from?
It depends. I mean, I'm not going to give you the consultant answer of saying it depends, right? So, but I think that the challenge with it is eventually it'll become ubiquitous and transparent, like many things, right? I don't know if you remember a long time ago, we talked about things like PKI and digital certificates and stuff like that, and everyone was downloading them and playing with them and so on. No one knew anything about them and so on. And now on your phone, you have like tens of thousands of these certificates. It's invisible. Nobody cares about it anymore. It's gone away. I think in order for things to be successful, they need to follow that pattern, right? At the end of the day, they need to basically become invisible and become adopted and embedded into everything. So consumers, not necessarily consumers and others may not know what actually is moving around, right? They may actually not care, and maybe that's the right answer at the end of the day. And here we are, sort of trying to figure out how to make it important so that we can adopt it and roll it out and things like that. But I think eventually, over time, I think these will become ubiquitous and they will become second nature. That will be the money of the future. And you know, it'll be another format of the money, and then we'll use it in that same way. So hopefully that answers your question.
Yeah. Another question?
Sure.
Yeah, so if you talk to some commercial banks in Europe, they will say that for them, digital euro is just something that comes from the top, just a compliance project. And on the other hand, in your presentation, we saw, you know, a lot of these benefits for them, a lot of opportunities. So my question to you is, how do we get them to change their mind? How do we get them to shift on this?
Yeah,
Thanks.
I mean, that's a super important point, because I think if it's only treated like a compliance project, then you're really missing the point, I think, in a very big way. And I think that's the value-added services box, right? I think if you go back to that box and say, actually, we can build a whole set of new type of offerings in this bank that will compete with X, Y, Z people from, you know, organizations on the outside of the bank, or even with competitive banks. Then that changes the narrative completely. If you treat it like a compliance project, then it becomes an expense, right? At the end of it, and then it's like a burden, and no one wants to do it, and everyone will drag their heels, and everyone will, you know, it will take years and years to implement it. But if you sell it as a value-added services, now I can provide new services and generate new income because I can do the following things. Then it changes the storyline in a completely different way. I think that's the conversation we need to have. And when I talk about education and awareness, that it really is to educate them about the opportunities, really, not necessarily about the cost and the burden, I think.
So you mean you have to educate the C-suite of banks and then financial service providers?
Yes.
Yeah. So that's interesting. Yeah. So because they wouldn't see this innovation by themselves.
No, I mean, I think it's difficult because I mean, these are all complex topics, right? At the end of the day, and they have enough on their plate on a day-to-day basis. But here we are, you know, that we can, if we explain it and put it into that perspective, I think it creates a new sort of, maybe enlightens them to think, actually, maybe we should invest in this project or program of work, or do these following things and enhance the offerings and the propositions that we have out there.
When you are originated from Canada,
Yep.
and then moved to Europe.
A long time ago?
Yes,
Yeah.
and then you saw also a project in Asia.
Yes.
Where continent-wise, or which countries are you know,
More
progressed
advanced?
further? Yes, and which are lagging behind?
Yeah, it's a good question, actually. I see a lot of stuff in developing markets moving quicker, simply because I guess the burden or the legacy burden isn't necessarily as much there, and there's a need to, you know, transform and innovate quickly, and then there's these new innovations that are there that can enable that. So I think those markets tend to have they're much more progressive, and others that have been, you know, very traditional take a long time to move.
Like Europe.
I didn't say that. But yeah.
I can say that. I'm from Europe. Actually, I'm from
I am as
Austria.
well.
We're a smaller country, but still within the European Union.
Yeah.
And in Germany, we have the same. Yeah, we share very conservative. John, thank you very much. But before I say for the final applause, Johnny, you will be back at 3 something. 3. Yes, because I make a shameless advertisement for the afternoon session, 3:20. Because in the afternoon we have 20-minute kind of pitches for different projects implemented: Caribbean, Brazil, Israel, Kazakhstan. That's you do. And this is 20 minutes. It's very short. It's very applied. Yeah, you see implemented project. And of course, also John Kiffmeister will be there. He covers the whole world, showing the 126. You correct me, CBDCs. 115. Okay, I exaggerated. Yeah, too Trumpy. 115 projects worldwide which existed or exist. This is an advertisement to come back in this room. It's a bit more quiet than the big audience, and the coffee's outside, and then you can always come back. Yes, John, thank you very much.
Thank you.
And yes, and we are back at 1:50 right after lunch, so lunchtime now. Thank you.